How do you short a currency pair and make consistent money doing it? In today's video, we're talking all about shorting, which is definitely different than taking a long position in the currency market, especially depending on which currency pairs that you're actually trading. In today's video, that's what we're focused on. Let's go take a look. So believe it or not, shorting is actually a different concept in markets than it is going long. There's actually some very different practical approaches that I'm going to try and cover and share with you guys to hopefully improve your win rate when actually shorting a currency pair. Now, there are some certain currency pairs that are very, very important to pay attention to what we're going to talk about today, and you may even see it listed. So stay tuned. Let's take a look. So shorting is different, right? There are different ways that markets move. Some currency pairs move very uniquely, as well as things like the S&P 500, which they often say takes the staircase up and the elevator down. That's the summary of kind of what we're talking about here. The staircase up, right? Gradual climbs, followed by rapid, crazy falls to the downside. This happens in markets more often than you would think, and it actually happens a lot of currency pairs as well, which is why the approach for shorting a currency pair actually can be different than trading it long. So let's talk about some more examples, but that's not a currency pair, right? If you look at the S&P 500, we're looking at this one, right? That's the SPX 500. Sure, that's going to be different than currency pairs. They trade differently, but check out some of these pair examples. We're going to take a look at some yen pairs, and I want to show you this. Here's NZD-JPY. Notice a slow, gradual rise to the upside, followed by steep declines on a downside. And we're going to talk about this in a second as to why this is, but here's pound yen. Pound yen, a slow rise, gradually making higher highs, higher lows, followed by fast, massive drops on the pair. So again, we're seeing shorting be a little bit different here than going long on the pairs that we've looked at. So before we get too far into this video, I do want to say we have a free Discord channel that you might want to join. It's a great way to keep up to date with when this stuff happens, when things are dropping, when things are going crazy, and you want to short a currency pair, we've got the same idea in mind. We're looking for opportunities. So if you'd like to join our free Discord, we share free analysis and all sorts of good stuff inside. You get some free downloadable PDFs and things like that with it. So again, we're sharing it on a regular basis. Click the link down below in the description. Join our free Discord channel. It should be the very first link in the description. Okay, so why does this happen? So everything we just talked about, fast drops, slow gradual rise. It's all about risk appetite and human emotion. It's something that we see very often in markets. Markets are often driven, as you probably know, by emotions, specifically greed and fear. But which one is stronger? Is it greed? Is it fear? I'm gonna make the argument for fear. And here's why. When good news hits, we see a gradual growth in appetite for risk, right? People slowly get more confident. They're like, okay, back to standard, back to good news in the markets and things growing back to normal, right? So we see a gradual increase in people wanting to jump in and buy the market, and whether it's a currency pair or the stock market or gold or whatever, right? But then when bad news hits the market, we see a massive dash for the store. It's kind of like Black Friday sale shopping. I don't know if you've ever done that, where everyone rushes into Best Buy or Target or Walmart or whatever, trying to get to the TV section or whatever they want to buy as fast as possible. It's a massive flooding of people. And that's what we happen to see in markets when people all want to sell out of a stock, when people want to sell out of a currency that is no longer in favor, and people are massively running out the way. So buyers sell all their positions, and some of the short sellers are even in there looking to take opportunities into their own hands and go short on pairs or markets that may offer downside quick succession moves, right? So investors flock to safe havens, which is going to be an important concept as to why this is happening, and some currency pairs that may be very specific to this sort of strategy, shorting on those wild dips. So what are safe haven? Safe haven investments are essentially what they sound like. They are safer investments that traders can hold onto during times of fear. Some examples are gold, bonds, the Japanese yen, the Swiss franc, and even euros and US dollars. You may notice that some of these currencies are not like the other ones, right? Higher risk assets like AUD, NZD, GBP, CAD stocks, right? These are considered higher growth, higher risk assets to invest in. And so that's why we see those ones drop drop like rocks when the market gets scared, and then they flock into these ones, right? That gold, the bonds, Japanese yen, etc., right? So we see these not acting the same. They are acting unequal in rising and falling markets. We see people flood into those risk off or safe haven currencies and investments and run away during times of fear in things like Aussie, NZD, CAD, etc. So what should we do and what should we be looking for? Well, if you believe that markets are going to head lower, if you think risk-off sentiment is, in full swing for your fundamental or technical reasoning, whether you're looking at yen pairs or Swiss pairs or you're looking at gold, look for those safe havens as the opportunities to be trading. So again, what we just talked about, things like gold, bonds, the yen, the franc, euros, and dollars, right? Those are markets that you can look at. You can say, okay, if the markets get shaky, if things get scary, people are probably going to buy those. So these are the pairs that we're going to be looking to play around with if we're looking at shorting and looking for those quick downside moves that we just talked about. Now, please remember, there's a warning that I should probably stop, and we'll put we got the exclamation point on the screen for a reason. Shorting or fighting momentum on safe havens during a market sell-off can be dangerous, okay? All trading during market dips and things like that can be dangerous, but you should know that these things move really quick. A massive money flow is piling into these investments, right? When everyone gets scared, they buy things like the yen, they buy things like gold, and those things appreciate very, very quickly, right? Hence why we see higher risk assets dump really quick, and we see people buying those safe havens. So there's a flooding for that. So we have to be careful that we don't actually chase. We want to analyze and still look for solid setups. And so that's why I put together some examples for you guys. By the way, if you're enjoying the video, hit the like button. These videos are completely free for you guys. They take a lot of time on our end, but we love doing this. So if you enjoy it, make sure to hit that like button, just support the channel. So 2020, great example, right? And the currency market edition is even more fun to look at. So if you're saying the 2020 sold off or 2020 market sold off like crazy, which currencies could we have been trading during that time? Well, let's say you recognize that markets were likely going to head lower based on the whole COVID-19 situation, right? It impacted a lot of markets, not just stocks, not just currencies. It impacted like all of them, right? And let's take a look at some of the crazy pair movement on pound yen. Take a look at this. We could take some examples from this. So let's say you're looking at pound yen, you're looking at the 4-hour chart, and price decides to break out big to the downside here, right? Big break of structure after this trend line failed. We saw big news, again, big downside risk for pairs like pound or currencies like pound with more attractiveness to the yen, which is that safe haven currency. Break of structure, retest of the trend, and look at this, the 38.2% held beautifully and very quickly gave us some excellent risk reward in this theoretical example. Yes, I am talking about this in hindsight, so please know, I know that it's not this easy in real time to take these perfect trades, but the idea is the same. We're looking for breakouts, we're looking for structure breaks, we're looking for dips on these things to start. Rather than trying to short them on the way up, I'd be looking at this and saying, okay, does the risk concern match the chart? Okay, yeah, we got a breakout, opportunities to short retest at fib levels, retest of structure, things like that. So here's the trade idea recap. We're looking for a strong breakout on news. We're looking for retracements, ideally a 38.2% and a resistance area. Again, we're talking about shorting, right? So we're trying to sell into this market pressure and we're looking for pullbacks to key areas. Stops keeping tight, right? This is important. Because although momentum can pick up drastically to one way, it can also be swinging back the other way. So if we're not in there with a good risk reward, we probably want to bail on the trade fairly quickly. That's at least how I approach it. And we're looking for quick continuation or we're out of the trade. Right? Keeping it very simple, back to our pound yen trade, you're entering in here and you're saying, if price doesn't go in the direction of the downside moving really quickly, I'm just going to get out, take my small loss and move on, because we can't get caught trying to short these things and then just holding on to a recovery. We want to short them and see the follow through or get out of there, right? Momentum either continues when there's great risk reward potential or you're out quickly for a controlled loss. When a real move is happening, you will know it. There's no question about it. I mean, look at these downside moves, right? You'll see those moves happening and you'll be like, okay, yeah, that's a real risk off swing. We're seeing the shorts come into play. So let's do another one. CAD Swiss, 4-hour chart, taking a look at the oil market while it was under pressure. The Canadian dollar falls and the Swiss franc, which is again one of those safe havens, gets bought up dramatically. So here it is, big move to the downside. Oil market selling off on something kind of recent, the Omicron concerns. And sure enough, big risk off sentiment comes in, pull back to that 50%, which lines up nice with structure. And sure enough, we get the sell, right? We get the opportunity to look for those great risk reward trades with a tight stop loss. Again, yes, I know I am trading this in hindsight. I'm showing you a cookie cutter example on purpose just to show you what it could look like, if you catch the right trades on this sort of stuff. Strong resistance, 50% retracement, strong tight stop loss, and letting that winner run, trying to get the most out of the market that we possibly can, right? So again, we're looking for a couple things, not just a technical bias, but a big fundamental catalyst oftentimes is imperative to a strong short position. So we're still, a couple things to think about here. We're still risking small. We're still cutting losses quickly. We're looking for momentum and we're looking to get out quickly if it doesn't. If it gets out on a reversal, no problem. We can look for re-entries. We're looking for the momentum to continue to carry on, or we're out of there. And keeping that stop loss very tight. So we'll keep on take a look. Well, actually, that's the end of the slideshow, I just realized. But what I will say this, right, is most people, when it comes to these situations, they're afraid to act. And the truth is that if you're going to be trading during these high volatility motions, you have to be ready for things to move very quickly. You've got to keep that stop controlled, that risk management, as always, should be locked on tight. And remember, you guys, we've got a Discord channel where we are covering sort of things like this all the time. If markets start selling off, we will be covering it within our Discord community. So check it out. There's a link down below in the description. Check it out, join us, and hope to see some of you guys in there. See you next time. What's up, guys? Thanks for watching today's video. There are more videos available on our channel here and here, so go ahead and click into that for some more free trading content. With that said, thanks for watching. We'll see you back next time.